Good Saturday morning to you. Welcome here to TM Signals. Great to have you. Appreciate you taking some time out of your busy Saturday morning. We'll keep it, fairly brief and to the point here with some things. But as we've launched TM Signals, we've had a lot of good questions from many of you. Many good comments as TM Signals evolves in its messaging. We built TM Signals based on a series of algorithms that are a fantastic tool for understanding and trading the market. And as many of you have jumped on and kind of experienced it and seen it and had various questions, being able to talk to the messaging and improve the messaging here, and having that help and feedback has been phenomenal. So thank you very much for that. In relation to all of that, today I want to speak to some of those things that have been most commonly asked. And I won't be able to get to every question that's been asked or anything like that, but there are some really common themes. And today we'll spend most of our time with the most common theme, and that is option application to TM Signals. Now, how do you apply options to it? How do you apply options here? We'll then go out and take a look at the MarketVibe, just a little bit more in detail about the MarketVibe and what some of the action has been this week here with it. We'll talk about some end-of-day signals, how the stops and price targets adjust, for each of these signals. So let's get down to it, and let's go take a look at option trading application, and let's start with a signal that came in on Alibaba. Now, Alibaba is one of the top performers when it comes to KD signals here at TM Signals. You'll notice that it's triggered 11 times over the last 2 years, 9 winners, 2 losers. But like any signal, the numbers that matter, this average winner gain and average winner loss. Right? When it comes to TM Signals, we're looking for trend. TM Signals and the algorithms are not trying to find the bottom and the tops. It's looking for the trends, and that has some serious implications when it comes to trading options and how to trade options going forward. But let me show you my Alibaba experience. Here's Alibaba, and it triggered on February 21st. It stopped out and exited on May 4th. Nice 13.5% gain. Easy, right? No problem there. Well, when you apply options to it, there are a few other things that come into play. And I applied options. I went and bought a call option here on February 21st. And here's the chart. And here's February 21st. And get a nice trade signal, and this is going to be great, grand, wonderful. And I hop into a 105 call. All right. Now, it's just out of the money, just about a couple bucks out of the money. And I buy this call, and next day, boom, there goes Alibaba. Nice move. But I'm looking for more. I'm looking for the trend. In fact, for those of you who know me, I trade these trades at Trader Minute, and I'm holding this because I'm looking for the evolution of a trend, and I'm looking for 120. And there are countless videos of me talking about Alibaba going to 120. This stock is worth 120. And, I'm in the call option, and boom, it starts to go. And the next day, okay, there was a downgrade, reversed middle day. The next day, gapped down and rallied back. And I'm in my call option, and it's not getting stopped out. But what's happening to my call option? My call option is losing value. Why? Because of time. If I have a stock, am I losing any time value? Not at all. No big deal, right? I can wait as long as I want. But with an option, and I had bought some time, but that time element hurts. That time element made it so that by the time I got to expiration and Alibaba, where it closed, there wasn't much value there for me. Okay, there wasn't much value for me to take it all. The next day, the stock popped, and hey, you know what? Boom, off it goes, moves up to 120. So where I had a losing experience with an option, right, the reality is the signal was fantastic. The signal didn't react to the noise of some of the reversals and gap ups and gap downs and all of that. The signal just continued to carry on forward and, show, hey, path of least resistance is higher for the stock. Now, why do I start off with a losing experience? You say, well, come on, there's plenty of positives. Why start off with that? Because I want to tell you, when it comes to option application, it's not as simple as slapping it on and trading a stock. Okay. Now, when it comes to option application, one of the most common things that people want, I want something that's going to give me 15% a month consistently every month. And, I don't want to take any losses. And you know what? I'm happy with 15% every month. Okay, great. Fine. If that's what you're looking for from the markets, options probably isn't the right game. There's too much variability in options, and there's too much upside in options and too much downside in options to try to take long calls and long puts, apply it to a stock signal, and to have that be realistic month after month after month. To turn around at the end of any year and go, ooh, okay, you know what? That's what it ultimately turned into. Absolutely. Very realistic, and, should be that case for most option traders. Unfortunately, for 95% of them, it is not. Okay, so applying options can have its pitfall, and the biggest pitfall when it comes to applying options to any TM signals isn't the signal, it's the time decay element on options. So how do we get around it? How do we manage with this? Can we still play options on these and be effective? Well, let's go take a look at a trend rider signal. Okay, we had a trend rider signal on First Solar that triggered back April 26th. Okay, on April 26th. Then, the stock here, it triggered when the stock price was at $28.99. Okay, and if I pull up First Solar's chart, we can see what's happened. Okay, $28.99 right back here, and the stock's now trading up over 36. Okay. I want to show you something, though, with the option price. And here is the option price of the May calls, okay? The May calls on the date the First Solar triggered bullish on the trend rider, okay? And you can see what these call prices are. Well, take a look at the 34 strike. Okay, it's showing a bid price of 0 and an ask price of 44, but there were some traded prices of 8 cents on this option that day. Okay, and you say, well, the stock was at 29. Why would you buy a 34 strike? Comes back to what signals are all about. Signals are all about trend. Trend. Signals, TM signals, is not about, hey, let's get 80% of the signals right. We could tweak the algorithm in a big way to make it so that 80% are right. Okay, that's not an issue. But the algorithm is built to look for trend. Why? Well, let's say we go out and buy these 34s, and for simplicity's sake, let's say we get them at 10 cents, which on that day, very realistic. Okay, we buy them for 10 cents. In fact, we could get them for cheaper, but let's say we buy these 34s for 10 cents. And instead of worrying about a stop, we say, you know what? There is a good chance that this stock goes on a trend. Let me put what I'm willing to lose into this trade. And if it makes money, great. If not, okay, well, I lose what I put in. What happens? Well, the May 34s, they closed yesterday. Okay, they closed yesterday. And they closed at $2.37. Okay, so essentially something that was 10 cents went to $2.37. Was it worth more from time to time, worth less? Yes, it had all those fluctuations. But the reality is there was a big trend here to where something that was 10 cents went to $2, and in fact, at some points was worth $3 and almost $4 at one point. Okay, that wasn't exactly one of the biggest moves. Wasn't one of the biggest moves that trend rider signals will show. But let's do the math on it. Let's say, for instance, okay, let's just say, for instance, that that we have one trade where 10 cents, okay, 10 cents goes to $1, right? Great, 10 cents to a buck. That's a nice game, okay? That's a nice game. How many trades, if we have 10 of these, what happens? Well, how many winners do we have to have in order to offset losers? Let's just say we only have one. We only have one winner. Okay, it makes 90 cents. Let's say we have 9 losers. Okay, so 9 losers. How much do we lose? We lose 90 cents. So essentially, if we capture one run and we miss out on 9, and 9 of them are incorrect, we break even. That's assuming just 10 cents to $1. In the case of First Solar, it was 10 cents to $2, $3, even, not quite 4 at one point. But, there's a much bigger upside there to it. But this losers, I lose 9, my max loss is 90 cents. Can't lose anymore. Well, let's go take a look at the trend rider signals, right? In order for an option to go from 10 cents to $1, right, what do I need? I need for the stock to at least go up 10%. Okay, a 10% move in most cases, not all, but in most cases is going to get me there. Let's go take a look at the last 25, signals. The last 25 signals, there are 7 signals, and some of them are active now, but 60% of these signals have been winners, But there are 7 of these signals where the option price has appreciated by more than 10%. That's about 30%. It's about 30%. So let's take it. What do our losers come up to? 7 losers, 70 cents is our loss. 3 winners, $2.70 is our gain. Did we lose more than we made? Did we lose more times than we won? Absolutely. And with this type of strategy, you're going to have far many more options go to 0. But one of the things that you're going to have are the explosive gains where 1 in 10 offsets all of those other losses. It starts becoming greater than that. Now it rolls up in a big way. I did this recently at Trader Minute and played this strategy, almost, no, not exactly, but, the same concept. And it was on the trend rider signal for Triple D. Now, Triple D, and let's go into the data here, but Triple D, it's still an active signal, but on the 18th of April, it triggered bullish at 1528. Triggered bullish at 1528. And I have the data here from Trader Minute when I made the trade. And you can see I got into the trade right back here, and I got in at 99 cents on April 18th, and I bought the 19th of May 15 calls, right? So, I bought some call options on it and said, all right, let me play the trend rider signal. And the signal was here on this day, and we started to see the stock, just drift a little higher, a little lower. Didn't really go anywhere right away. In fact, on this day right here, one of you're probably out there, decided to call Triple D, diners, drive-ins, and then capitalize the word dives, right? Basically saying this was a stupid stock and it's not going anywhere. What did TMSignals show? Well, that move was insignificant. That move didn't matter. And then here we go. It starts to move a little, and it starts to go a little, and then we come into earnings. Triple D is getting ready to report earnings. At this point in time, what has happened? Well, my option has gone from 99 cents to $1.50. Great. It's a win, right? It's a win. Do I take it? Well, sure, but that's not the win I'm looking for. I had a trend rider signal. This is showing me that there's a good chance of a trend emerging. I want to be on that. So what do? Well, my option now here is worth a little bit more than I want to have on earnings. So I take it off. I close the trade. I close it on May 3rd. But at the same time, on May 3rd, over here, a little more to the center of the screen, I went and bought some May 18 calls. And I bought them for 22 cents. Why'd I do that? Well, the May 18s, when I bought those, the stock price was 16.5. And I bought the 18s for 22 cents. Why? Because I was able to put in what I was willing to risk. And in fact, I only put in what? $300? I didn't put in a lot. I wasn't in a position where I was going to lose a lot. Okay? It wasn't that type of scenario. I put in basically what I gained on those original options. Earnings came out. The stock dropped hard, fell. Did I have to make any kind of decision through this? Do I get out? Do I stop out? What do I do? No, I didn't have to worry about it. Why? Because I already had what I was willing to risk. Now the stock rebounded, came on back. The next day, popped up to 17. My option was still a loser. And then we get this move right here. We get this big up move. Well, wait, what's going on here? What's happening? I mean, come on, this blew through technical levels. It blew through overbought and all of that. Here we are chasing on higher. Okay, what happened to my option? Well, my option decided to go from 22 cents to 250. A $300 position decided to pocket me $2,500. So what did I do? Did I just take it and move on? Well, you know what? I had plenty of people tell me, hey, you know what? Take it. It's more than a double. Just take it. Take it. You don't want to give up your gain. What did I do? I trimmed a little bit. I sold a little bit. Why? Well, because my exposure was a little bit higher. But I continued to hold it. Why? Because I was looking for more. I was looking for that trend. The next day, the stock opened, and it fell almost $1. And, okay, great. What did I do? I took some of those gains, okay? I took some of those gains that I had on Triple D, and I actually bought some more. I bought some 19.5 calls for 15 cents. What happened? They went to $1.88. I closed them 2 days later. What did I do? Well, I turned around and I bought some more. So essentially, I'm closing a whole bunch of contracts at $1.88 and opening a few more, but only at 25 cents. So what's happening to my exposure? I'm actually risking less. But yet I'm continuing to keep that upside. Now, do I know when it's going to end? Do I know when that move is going to end? Does TMSignals tell me? Does the trend rider tell me? No, it doesn't. Yeah, it has a price target, but it had blown through all of those. It doesn't tell me when it's ending. It told me what? It told me this stock is probable to trend or has a high probability of trending. Now I'm playing the trend. And I continued to play it this way, where as my options would go into the money, I would take them off and I would actually buy more options but less money on them. And if it continued to go, great. I'm going to continue to pile on massive gains. If it stops going up like it did here this week and just stops, then I'm going to lose what I put in. Okay? And you can see here that ultimately I have 1, 2, 3, 4, 5, 6, 7, 8, 9 triple D trades. I have 9 of them. 4 of them went to 0. But the 4 that went to 0, I had 200 on, 420, 350, and 330. Just my last triple D trade in the gain from 32 cents to 139, that made more than I lost on these other 4. Had triple D continued to go higher, what would have happened? Had triple D gone up another $2 this week, the way these options were positioned, it would have been worth $7,000. Okay? Yeah, I didn't realize the $7,000, but I was able to put myself in a position to have that potential because of being able to simply use these out-of-the-money options and continue to push them on up and continue to trade it from an exposure standpoint. When it comes to TMSignals, especially with the trend rider, it's about trend. Okay, trend. It's not about, oh man, is this stock going to gap up the next day? And do I take it? Oh man, can I buy it at the close and sell it tomorrow at the close? It's not what it's about. Those things are random. There are other things that measure those things better than TM signals. TM signals is looking for trend. And if I want to apply options to signals that are signaling trend, I don't want to be in a position where I'm going to get knocked out, because when stocks go on trends, they're going to be more volatile. Case in point, Triple D. They're just going to be more volatile. So I don't want to have to be worrying about, oh man, do I get stopped out at the low, and oh man, now it went up and went my way, and why did I stay in? I don't want to deal with all those emotions. So I put in what I'm willing to risk, and I go. 7, okay, of the last 25 signals, okay, have had over 10% gains, which means that at least a 1,000% move on those out of the money options in almost every case occurred, and in most cases, way more than that. Am I okay? I have Triple D. I have those gains. Am I okay that maybe my next 3 signals go to 0? Do I really care? Of course I care. I want them to go higher. I want them to make money for me, but I know that's part of the game. I know that's part of the element here, okay? Flat market, fine. Flat market, who cares? Trend Rider, Katie signals, they don't care about flat market. They don't care. They're looking for the emerging trends, and there are always emerging trends when it comes to a flat market. So whether we're talking about First Solar, Hymex, Triple D, Beazer Home, Majestic Silver, whatever we're talking about, yeah, Weyerhaeuser, sure, there's a 2% gain. My option isn't up. In fact, my option's down. But 2% gain on the stock, yeah, great, but not what I want, right? I'm looking for that 10, 15, 20, 30% gain. And you say, well, you're getting greedy. Yeah, sure, great. But I'd rather do it this way. I'd rather risk little and continue to roll it up as I have gains than to sit there and go, well, I'm going to put $10,000 on a position, and I'm going to use X price as a stop, and wake up one morning and all of a sudden the stock is gapped down or moved so fast that I was never able to get out of my option. Because as any of you who have traded options live, you know that can be the case many, many times. So on Friday, I had a signal. It was a Katie signal here on Target. Target triggered bullish. Now, what's the history here of Target? Okay, the history of Target is 5 winners, 4 losers. You say, well, that's not very good. Yeah, I mean, there are plenty of losers in here. We can see what the past signals have done and how they've looked like, and all that data is here. But look at the average winner gain and the average loser gain. Average win is 7%. What do I know about that? Well, because Katie signals never stop out at their price target, I know that their highs were probably somewhere around 8 to 9 to 10% when they hit their highs. Average loss, okay, 1%. Great. How do I trade it? Well, here's the chart. So what I do yesterday, I went out and bought some May 57.5 calls. Now, I debated, do I buy the 55s or do I buy the 57.5s? The 55s are more expensive, but they're in the money. They're not going to be as volatile and probably better chance of success. But why would I go with the 57.5s? I'd go with the 57.5s because I'm looking for trend. I'm not looking for a move to 57. I don't care about, oh, well, this resistance level possible and maybe this resistance and all of that. Trends, they don't care about resistance levels. Who cares? Trends blow through resistance levels. I have a signal that says there's a good chance of seeing this type of move. So what do? I put what I'm willing to risk on some out-of-the-money options. Now, I didn't go to the 60s. I could have gone to the 60s and played it with even less, but I went with the 57s, 57.5s, and I'm looking for that big move. I get that move, my option gain is going to be explosive. I bought them for 60 cents. Okay, I get a move here to where it goes to $60, right? My 60-cent option is worth what? $250, $270, $3. Okay, and every 60 cents higher is another 100% gain on my option. We come up and fill this gap, it's a home run. We come up and just come to this resistance or support area, it's a home run. And I can look at all of that, but my signal has said what? It has said the chances of target trending higher from this point are elevated, and it doesn't do that very often. This isn't something where it says that every day. This is something where since the beginning of 2015, it's only said it 9 times. And on 2 of those occasions, it said, hey, chances are for a trend lower. Applying options to TM signals comes down to trend. And looking to trade that trend and trading that trend explosively. Sure. Can you apply options, some deep in the money options, and just trade it with the price targets and stops and go with it and keep it very simple and trade the options like the stock? You sure can. But I think if you're applying options to TM Signals trades, I think by doing that, you're missing the mark a little bit. That's a stock element, and that works great, and, I'm all for it. But if you're applying options, the game is the explosive moves, because one explosive move is going to make up for 10 or more losses. And that is what makes options amazing, fantastic. And so if you're going to apply options, just take a look at that. Don't go out live trade it yet. Paper trade that. Just paper trade it. With paper trade, you won't have any problem with things going to zero, right? Because you're going to have plenty of things go to zero. But for some reason, live traders hate when something goes to zero. Even when they even when they make money on a trade and roll it up and something goes to zero, it's it told me I was wrong on my trade. Well, that's part of the game, and part that, I think if you can embrace, in fact, I know if you can embrace, TM Signals becomes a fantastic tool. MarketVibe. On Monday, the MarketVibe did not trigger bullish. The market was up big. In fact, the S&P hit an all-time high on Monday. Yet the MarketVibe did not trigger bullish. The MarketVibe had triggered bullish back here. And right up here, it triggered neutral. Okay, so it caught this run. Okay, it triggered neutral, basically saying, look, this market, the chances of it trending in a big way right here are slim. Yeah, we hit a new high. It did not trigger bullish. Why? Then we get a big drop here. Wednesday, drop. Market, one of the bigger moves that we've seen in the market in a while, and it did not trigger bearish. Why? Well, one of the big reasons is because the MarketVibe has nothing to do with the price of the market. The MarketVibe is looking for the next market trend. The MarketVibe has caught almost every market trend over the last since the beginning of 2015. It's caught almost every single one, and you can come into the data, you can come into the chart, you can look at it and see that. It's very clear and it's very simple. But the MarketVibe is not based on the price of the market and what it's doing around moving averages and what different technical indicators say. The MarketVibe is based on market internals. It's based on things like the bullish percent index, like the volume flows in and out of the market, like the number of stocks trading around moving averages, 3-day, 7-day, 20-day, 50-day. It's based on how international stocks are trading. It's an amalgamation here, or conglomerate, or aggregate, whatever you want to call it, of market breadth indications in order to predict, to forecast. This isn't a hindsight thing. This is a forecaster, what the next potential trend on the market is. The results speak for themselves. They've been fantastic. How do you use it? Well, for me, I always feel more comfortable buying calls on stocks triggering bullish when the MarketVibe is bullish. I always feel more comfortable buying puts on stocks or shorting stocks that are triggering bearish when the MarketVibe's bearish, right? It's nice to have that match. When it's neutral, how do I deal with it? Well, I'm not as exposed. Yeah, I'm willing to play Triple D, and I'm willing to go play a little Exxon and some GM and Vegas Sands, but I know that I can get caught in the chop a lot easier. The emergence of those trends may not be, as dynamic. Okay. And so with the MarketVibe, it's not taking into account any of the market action. It's taking account the internals. And as far as the application of that, this is something that I used as a fund manager, a variation on this as a fund manager to know what my hedging was. Okay. What my hedging element was here, and should I get more hedge, less hedge, what should my exposure be? And if you want to see that in action in terms of the 100K challenge and how I use it for the exposure, you can see that over at Trader Minute. But that's how I use it. It's also something where I'm not going to argue buying market calls when it turns bullish and buying market puts when it turns bearish. The results tend to be very, very strong. All right, TMSignals and Trend Rider. What's the difference? Okay, what's the difference between these two? They're both looking for trend. Trend Rider is dealing with more small cap, mid cap type of names. There are some large caps in there, but stocks that historically move a lot more. Okay, stocks that are going to move 40%. If you look at something like Triple D, okay, which triggered on the Trend Rider, we obviously have talked about it, but you just take a look at the past history on Triple D. These are explosive moves, right? General Electric is not going to trigger on the Trend Rider. Why? Because while these moves may look explosive, this is 28 to 31. I mean, this is a 10% move, and that's one of the big moves, right? This isn't 20, 30, 40, 50%. Okay, so Trend Rider is looking at those stocks that can move a lot more explosively. They tend to work better on the Trend Rider algorithm. Katie is looking at stocks that have just more gentle types of trends, your Apples of the world, right? And it doesn't mean that, the trend isn't going to go higher. I mean, Katie's been phenomenal with Apple. Just go pull up Apple. It's nailed these runs. But Apple's not going up 40%, right? Apple's not going to appreciate in value 40% like Triple D or like First Solar or something like that, or Hymex. It's not going to move to that same degree. It's too big of a company. There's more liquidity, right? There's more liquidity with it, but it's too big of a company. And so the algorithms are very different, but they're looking for the same thing. And they're looking for that signal that there is a high propensity of an upcoming trend. Now that takes me to NVIDIA. And NVIDIA has prompted a lot of questions because NVIDIA did something. NVIDIA triggered bullish on April 19th, okay, at $99.68. But if you look here, it was just adjusted again. I mean, it's been adjusted 10 times. It was just adjusted here on May 19th. And the adjusted price target, 131.91. Well, NVIDIA is trading at 135. 136 is what it closed at. And for the last, since this big move here, the price target on NVIDIA has been lower than the actual price of the stock. The stop has been significantly lower, and all that is by design. Why? What's going on? Well, when stocks go on a big move, when they trend, okay, they tend to have big down days. If they're upward trending, they tend to have some big down days that don't mean a lot, and when they're downward trending, they have some big up days that don't mean a lot. Just take a look at this move right here. I mean, this was a big move. This was a big down day here in November on NVIDIA. Had the stops and price targets adjusted to the current price, it would have stopped out on this day. In the same way that had on Tuesday, NVIDIA adjusted to the actual price of the stock rather than to the way the algorithm progresses, it would have been stopped out on that move. But the algorithm is set so that when stocks become explosive like this, that it has a greater cushion because these types of moves are just more probable and they're less meaningful into the ultimate trend of the stock. We see that with NVIDIA. Will the price target and stop eventually catch up? Yes. And one of the reasons that we're comfortable in doing that is not just because of the data, but when you see stocks make explosive moves, rarely do they just go up, they hit a stop at the top, and then all they do is go down. Normally, they find at least a consolidation zone. And so that adjustment of the price target and stop helps to, helps to ride that stock until it's able to find that consolidation zone and then jump off. Never are KD triggers going to stop out at the high. That's just not how they're designed. They're not designed to do that. Every time a signal hits its target price, right? Its price target, its upside or downside price target, it adjusts, it rolls it. It doesn't close the trigger. Why? Because it's looking for trends. But every time it hits its stop, it closes. Every time it closes when that stop is hit. This adjusted expiration has brought up a few questions. This has nothing to do with options, okay? And in fact, we're going to change the name on that. It's an adjusted time stop. So KD and Trend Rider signals both have time expirations on them, meaning if a price target or a stop level haven't been hit over a certain period of time, the signal disintegrates, it's done, the signal closes out, okay? And, the signals and the setups are such that there is a time sensitivity to them. Now, this isn't a day trading time sensitivity. You can see NVIDIA, it's June 9th, so there's still plenty of time here, on that. And as it continues to hit price targets, this time stop will roll up. But, it has nothing to do with options, but everything to do with, with the algorithm itself and the validity of that signal. KD signals, Trend Rider signals, they're designed to be about 60 to 65% accurate, meaning about 60 to 65% of the time they're going to make money. That said, they hit their initial price targets at a much greater rate. Okay, but one of the things that'll happen is it'll hit its price target, it'll roll, and then it'll reverse and get stopped out. So some of those that look like small losses, well, they hit a price target or two in the meantime, okay? But we're not looking for one or two price target hits. We're looking for more, and that's what the algorithm is looking for off of these signals. And so the thing that I can't emphasize the most, and when it comes to using TM signals in this tool with the KD, Trend Rider, and MarketVibe tools, this is about trend. This is about finding trend in any market. This is about profiting from trend. Can you day trade and buy when something's oversold and sell when it's overbought and have a little fun there? Sure. Do people make consistent money doing that? I've not met them. The ones who make consistent money when it comes to the market are the ones who are playing for the trends. And in a market that's been as trendless as what we've seen over the last year and a half, in very big pockets. We've had some big trends that have moved the market, but we've gone through trendless pockets that have been historic. In that type of trendless environment, KD, Trend Rider, MarketVibe were developed, work, and are effective. When the market goes into a more trending environment, their effectiveness only amplifies. And with that, there are great profits here to be had. All signals are end of day, okay? They're all based off of end of day pricing. They're all based off of where that stock is going to close. But every day, the alert or the notice of what signals are out there gets posted at least a half hour before the close. Why? Well, so that it's tradable. The algorithm looks and says, hey, you know what? Chances are this signal is going to hold into the close. And whether or not that signal holds into the close, it runs with that signal as if it held, okay? Runs there with it. It doesn't say, oh, well, there was a signal, and now it did this into the close, so now it's not a signal, okay? That will happen from time to time, but more often than not, well over 90% of the time, the signals hold, and so it gives a nice trade advantage to be able to deal with. These signals have nothing to do with earnings, Nothing to do with analyst comments, nothing to do with morning gaps, nothing to do with Donald Trump, nothing to do with Russia, nothing to do with the price of oil, nothing to do with any of that. It is pure price action. It is pure price action, and in that it takes the emotion of the market away. And in trading KD signals, right? If you're just going to purely trade KD signals or trend rider signals, what's the point of even looking at the market news? There isn't. You try to apply those emotional elements into this, and it's going to be a totally different experience than what the analytics and what the algorithmics are of KD and the trend rider. I sure appreciate you joining us here this morning. I hope it all helped. If you have any more questions, please shoot them over to support@tmsignals.com. We will continue to run webinars from time to time in order to continue to answer questions. You will see content that I've delivered here today be added into the help center as we go forward. Like we've said, the algorithms are set, the KD triggers, the trend riders, the MarketVibe, those are set. The messaging around how it's all delivered and some of these things we talk about, those will continue to evolve. And we appreciate your feedback, and we wish for your great trading success there. If you're not a member of TM Signals and you'd like to join, it's very easy. Just go to tmsignals.com. Okay, it's tmsignals.com. Click on Start for free, and this is all it's going to ask you for your 7-day trial. There's no credit card, no nothing. Just name, email, and setting your password there. Thanks for hopping on. Have yourselves a great Saturday, great weekend, and we will talk to you later. Take care.